Welcome back. Let's turn our attention now to the commodity markets. Manisha, as promised, is now with us on the show. Manisha, what is the commodity that you're looking at today?
Well, I'm looking at the gold prices because the volatile moves in this space just about continue. After hitting an all-time high in this week itself at around $3,500 an ounce, we've seen some profit-taking come into the markets. Well, yesterday it fell all the way down to below 3,300, but it's holding above those levels at this point in time. And there is a volatility of anywhere between $60 to $100 an ounce that we are seeing in gold prices on an everyday basis. Not just international gold prices, but the Indian prices, after hitting almost a 99,400 level of a mark, have seen some decline coming in, holding around that 96,000 rupees at this point in time. But even with these corrections, if you look at the gold prices, they're up by 10% on month and up by 27% in this year until now. Well, the markets are looking at a few things which have led to some decline or some cap in the gains coming in. One is the dollar index, which did fall below 99 toward three-year lows. That has seen some gains come in. And then there's a bit of a uptick in the global equity markets as well. So you have seen some gold money go in there as well. Markets also are looking at US indicating potential lower trade tariffs with China. There has been some retracting of statements as well about the US Fed independence. And that also has eased a bit of a safe haven buying that we saw in gold. But a couple of important developments, and that would continue to support gold prices. One is China buying gold. The central bank and the institutions have been, even the insurance companies are buying quite a bit of a gold. And March has been a fifth straight month of gold buying there. If you look at the numbers therein, well, China bought 50 tons in Feb and another 5 tons in the month of March as well. China has been buying for the last 3 years now, and that pattern just about continues even now. More interestingly, even as China is talking about internationalization of yuan, China also is looking to invest via Shanghai Gold Exchange in cents of gold. There are conversations and reports that gold trading in China could also be internationalized, and not just trading, but deliveries and warehouses also will be opened up to the world. That really comes in on a big one, and that has been supportive for gold. Well, that's about China. But when you look at the US imports of physical gold, they also have been on the higher side. They're actually categorized as industrial supplies and materials. So when you look at the US trade data, that shows you that in the month of November or for the month of Jan, we have seen very strong gold being bought into US. In November 2024, the holdings or imports per month was at around $2.8 billion, which we have seen surge in the month of Jan. This was ahead of tariffs. In the month of Feb as well, it has been a double-digit billion dollars of an import in US that we have seen come in for gold. Another important thing to watch is the statement that has come in from the Atlanta Fed official, who says that they are looking to introduce new GDP estimation model adjusted for gold trade. So there are newer developments coming in from across world, especially from China and US when it comes to gold trade, and that clearly would be supportive going forward. Global ETF holdings for gold also are at September 2023 highs, and the gold ETFs for US are at all-time highs. So various newer records being created there as well. So even as we are working with a bit of a profit-taking in case of gold, Goldman Sachs, JP Morgan do tell us that it would be higher highs, all-time highs, before we close this year. And then they are estimating $4,000 an ounce for 2026 as well. So, well, buy on dips does look like a strategy.
Absolutely. Buy on dips does look like a strategy. Right now, some profit booking, but going forward, maybe year-end, we could see newer highs coming in as well. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Vishal Mulkan of mulkansview.com and also discuss their top trading bets.